The war in Iran and across the Middle East could have a major impact on the world economy. There are fears of rising oil prices and falling stock markets. For more, we are joined by the Hill's business editor, Sylvan Lane. Hey, Sylvan. So, how are oil markets reacting to this fighting?
So we've seen a pretty big increase in oil prices so far, up about 6% from when the conflict began. Currently trading right now as of Monday morning, about 11 a.m., right around $71, $72 a barrel. But we saw oil prices spike a little bit earlier in the year because of these brewing tensions in Iran. Obviously, Drew, this has been a story that's been developing over the past few weeks. So markets and investors have been preparing for a situation like this. Now, the big question here at this point is whether the Strait of Hormuz, the main way that shipping can get out of Iran, whether or not that remains open or closed. If Iran follows through on its threat to try to fully blockade it, that's when you could see oil prices really start to get out of hand.
Why is it that the Strait of Hormuz is so important to the price of global oil?
Mainly because of its important to shipping. You know, obviously the Gulf is a massive producer of oil. The U.S. and a lot of other countries depend on it, not only just to have it there, but to stabilize oil prices and the oil supply across the world. So if that strait is closed, then you're going to have all this oil that can't get out of that area, can't make it to market. Supply goes down, demand stays at least the same, or maybe even goes up because of the military operations, and then the price goes up.
Qatar has halted LNG gas production after Iranian attacks. How do you think that could impact markets?
That's another instance where, the lower supply of these energy products you have on the market, the higher the prices for them are going to be. And that's not just an issue in terms of, prices at the pump or energy bills for households, which are obviously really important, not only just in real life, but politically. But these also raise costs for companies. It changes what they're willing to do in terms of construction or development or other things that require a lot of energy and fuel. So you can start to see these prices start to bleed through the economy in the form of higher inflation or shortages, akin to what we saw up to a lower degree in the aftermath of the coronavirus pandemic.
Yeah, so oil is obviously a commodity that has a global price, right? How will that translate when it comes to the prices at the pump, what people actually pay? How much lag time is there between a spike in global oil prices and when people actually see that ticker start to go up faster?
Given how volatile the price of oil has been, it's, kind of hard to pin down when we'd exactly see an increase at the pump. But, oil markets move fairly quickly. These are, commodities, especially now in this era where it's a lot easier for people to get in on investing and make these bigger bets with computers and algorithmic trading. The volatility in these oil prices is something that we're going to have to watch pretty carefully. And that's another thing that may make it harder for some companies to adjust their pricing based on where they think that the oil price might be. Now, obviously, if you start to see prices rise at the pump, that's not only going to strain American households and budgets, but that could also lead to a decline in broader economic activity. If your car costs more money to fill up, you're probably going to be less likely to take it places or spend money on other things when you know you're going to have to pay more at the pump.
Yeah, I imagine it's also going to hurt businesses that need to transport goods across the U.S., whether that be through the air or on the ground. So, how do you think this could impact inflation as it's understood and felt by people across the country?
I think if this is a protracted conflict, the president was talking about how he was prepared to, keep going at this for 4 weeks, but obviously it's very hard for anybody to say what's going to happen next. But if this is a protracted conflict where there are long-term questions about the amount of oil and energy that we could actually get out of Iran in that region, then you could start to see inflation rise as oil prices and energy prices stay higher and companies have to adjust that new reality. We saw a little bit of a situation like this in the wake of the war in Ukraine, where inflation was obviously rising in the wake of the pandemic, appeared to be settling out a bit, but then spiked again when the war in Ukraine started. If we have a protracted conflict like the war in Ukraine has been, then that will likely increase energy prices and the various things that depend on energy, including food, basic household goods. If this is something that can get resolved somewhat quickly, then we may see little to no impact on overall inflation.
How are stock markets reacting both here in the United States and abroad? And do you have an idea of what sectors of the economy could take the worst hit if this is a prolonged conflict?
Certainly. So we're not seeing a huge reaction on the stock market right now. The Dow is down about 350 points, but in today's day and age, that's, less than 1% almost. So, we're not looking at a huge stock market decline. These kinds of swings happen pretty commonly. But the industries that could be most affected if this does become a longer term problem, you're going to see airlines, travel, vacation, anything that involves international travel or high energy costs for fueling those planes or boats, ships, anything that requires a lot of energy is likely to get hit. Some discretionary spending, some leisure stocks could be hit too. On the other side of things, we could see energy companies potentially profit from these higher prices, and some companies related to that kind of situation that could benefit from that. We might see a little bit of an increase there too.
All right, we'll leave it at that. Sylvan Lane, business editor at The Hill. Thanks so much for your time.
My pleasure.